August has started, and this month there are 5 specific situations that could cost you real money. Some through payments you might be missing entirely, some through timing shifts that catch people out every single year, and some through charges you may not even realize you're not supposed to be paying. Today I'm walking through all 5, in order of urgency, starting with the one you need to act on this week. This is Retired UK, the channel where we break down exactly what's changing with your pension, your benefits, and your household bills, in plain English, with no jargon. I'm not a financial advisor, and nothing in this video is personalized advice. But every figure and every rule in this video is checked against government and DWP sources as of today, the 6th of August, 2026. If this is useful, subscribing helps more than you'd think, because it tells YouTube to show these updates to more people who need them. Now, let's get into your August checklist. Check 1. The attendance allowance most pensioners still aren't claiming. This is the most urgent item in this video, because unlike some of what follows, this one is genuinely about money sitting on the table right now, and the sooner you claim it, the sooner it starts. Attendance allowance is a benefit for people over state pension age who need help or supervision because of a long-term illness or disability. Physical or mental, doesn't matter which. It is not means tested. Your savings, your income, your other pensions, none of it affects your eligibility. And yet current estimates from money-saving expert and policy in practice suggest that around 1.1 million pensioners who are entitled to this benefit are not claiming it, leaving roughly £5.2 billion unclaimed every single year. Here's what it's actually worth. There are 2 rates. The lower rate, for people who need help either during the day or at night, currently pays £76.70 a week. The higher rate, for people who need help both day and night, or who are terminally ill, currently pays £114.60 a week. Because attendance allowance is paid every 4 weeks, that works out to either £306.80 or £458.40 landing in your account every payment period. The reason so many people miss out isn't that they don't qualify, it's that they assume they won't. If you've got arthritis that makes getting dressed difficult, if you need someone to remind you to take medication, if you're unsteady on stairs, if you need help preparing meals, if a health condition means you shouldn't be left alone at night, these are the kinds of everyday difficulties that qualify, not just severe disability. Many people also assume it's only for people in residential care. It isn't. It's specifically for people living independently who need that extra support to stay that way. The claim form is available from gov.uk or by phone from the Attendance Allowance helpline. It does take some paperwork, details about your condition and how it affects your daily life, but the DWP and organizations like Age UK and Independent Age offer free help filling it in if the form itself feels like the barrier. Claim this month. Every 4-week payment period you wait is a payment period you don't get back. Check 2. The DWP payment date that's shifting this month, and the trap that comes with it. This is the one that catches people out every single year around a bank holiday, and August 2026 has a particularly awkward one. If you live in England, Wales, or Northern Ireland, the summer bank holiday falls on Monday the 31st of August this year. The DWP does not make payments on bank holidays, so if your universal credit, state pension, pension credit, attendance allowance, PIP, or carer's allowance payment is normally due on the 29th, 30th, or 31st of August, it will instead land early, on Friday the 28th of August. If you're in Scotland, your summer bank holiday already happened earlier in the month, on Monday the 3rd of August, so check whether that already affected a payment due around then. Here's the important part, and it's exactly the same trap that catches people every time a payment shifts early. Receiving your money 2 or 3 days earlier does not mean you've been paid extra. It is the same amount, for the same period, just arriving sooner. If your payment normally covers you through to the end of the month, it still needs to cover you through to the end of the month. It's simply arrived a few days ahead of schedule. The mistake people make is treating that early arrival as a bonus and spending accordingly, which then leaves a gap before the next payment lands on its normal cycle. The practical check for this month. Look up your specific payment date. State pension timing depends on the last 2 digits of your national insurance number, so it's genuinely personal to you. And if it falls on the 29th, 30th, or 31st, Mentally shift your budgeting so that Friday the 28th's deposit is treated as arriving on time, not early. Don't let a 3-day shift turn into an unplanned gap at the start of September. Check 3. The card charge that is illegal in the UK, and some shops are still trying it anyway. This one's a genuinely useful "did you know?" because the situation in Britain is the opposite of what you might see reported about other countries. In some places, businesses are increasingly allowed to add a surcharge when you pay by card. In the UK, that's been banned for consumer transactions since the 13th of January 2018, under the Payment Services Regulations, and that ban is still fully in force in 2026. Brexit did not change it, whatever you might read online. What this means in practice: if you're a private individual paying with a personal debit card, credit card, or a digital wallet like Apple Pay or Google Pay linked to a personal card, a business cannot legally add an extra charge simply because you chose to pay by card. Not a card fee, not a processing fee, not an admin charge. If the only reason for the extra amount is how you paid, it's not allowed, whatever label they put on it. There are some genuine exceptions worth knowing, so you're not raising a false alarm. Businesses can still set a minimum spend for card payments. They can still charge a fee for something separate, like a booking fee that applies regardless of payment method. And the ban only covers personal cards. A surcharge on a business or commercial card is still allowed. But for the ordinary pensioner paying for groceries, a meal out, or a taxi with your own personal card, no card surcharge should ever appear on your bill. If you spot one, you're entitled to query it and refuse to pay it. And if a business won't budge, you can report it to your local trading standards. The check for this month is simple. Next time you pay by card anywhere, glance at the total against the advertised price. If there's an unexplained gap, ask why. You may well be owed that money back on the spot. Check 4. The winter fuel payment. Why late August is exactly the right time to check your position. This one catches people because it feels like a winter problem, not an August one. But the eligibility rules for this year's payment are actually determined by a window that opens next month. For winter 2026 to 2027, everyone who has reached state pension age is eligible for the winter fuel payment again. That's £200 if you're between 66 and 79, or £300 if you're 80 or over. But there's a clawback built in. If your annual income is above £35,000, HMRC will recover the full amount either through your tax code or your self-assessment return. So for higher income pensioners, this isn't free money. It effectively gets paid back. Eligibility itself is judged by a specific qualifying week. This year, that's the 21st to the 27th of September 2026. You need to have reached state pension age by the end of that week to qualify for this winter's payment. If you're right on that boundary, or if a partner in your household is, that week matters enormously for your eligibility. The August check is this. If your income is close to that £35,000 threshold, or if you've had a change in income this year, a rise in a private pension, rental income, part-time work, this is the moment to look at whether you're going to end up on the wrong side of that line and have the payment clawed back automatically. If you'd rather not receive it at all than have HMRC adjust your tax code later in the year, there is normally an opt-out process available before payments go out, and it's far easier to sort that now than to unpick it through your tax code in the new year. Also worth flagging, most people don't need to apply at all. If you already get the state pension or a qualifying benefit, it's automatic. But if you've never received it before, or you deferred your state pension since you last got one, you will need to make a claim, and that's something to get moving on before the qualifying week arrives, not after. Check 5. The mid-year tax check most retirees never think to do. August marks roughly the midpoint of the second half of the tax year, and if you have income beyond your state pension, a private pension, savings interest, rental income, part-time earnings, this is exactly the moment to check you're not heading toward an unexpected tax bill, or, just as importantly, that you haven't overpaid. If you file a self-assessment return, your second payment on account for the 2025/26 tax year was due on the 31st of July. So if that's already passed you by, AMRC will be applying daily interest on the shortfall from that date, and it compounds the longer it's left. If you missed it, don't wait until the January deadline to sort it. Pay what you can now to stop the interest clock. And if the amount doesn't reflect your actual current income, you can apply to reduce your future payments on account, rather than simply overpaying based on last year's figures. There's also a quieter trap worth checking, regardless of whether you file self-assessment. Many retirees draw income from more than one source, a state pension plus a private or workplace pension, say, and HMRC has to guess how to split your tax-free personal allowance across them through your tax code. If that split is wrong, you can end up paying too much tax through pay on one pension while the other goes untaxed, without ever seeing an obvious warning sign. The August check is to actually look at your latest tax code. It'll be on a payslip, a pension statement, or your personal tax account online, and check it's using your allowance the way you'd expect it to. If something looks off, HMRC can correct it well before the tax year ends, but only if you flag it, rather than waiting for the annual reconciliation to catch it for you. The complete August checklist. Check whether you or someone you care for might qualify for attendance allowance. It's worth up to £458.40 every 4 weeks. It isn't means tested, and roughly 1.1 million eligible pensioners currently aren't claiming it. If your DWP payment is due on the 29th, 30th, or 31st of August, expect it early, on Friday the 28th, and budget as if it arrived on schedule, not as a bonus. Remember that card surcharges on personal debit and credit cards have been illegal in the UK since 2018, and if you spot one on a receipt, you're entitled to challenge it. If your income is anywhere near £35,000, check your winter fuel payment position before the qualifying week of the 21st to the 27th of September, so you're not caught out by an automatic clawback later. And if you have income beyond your state pension, check your tax code and your payment on account position now, rather than waiting for a January surprise. If this was useful, hit subscribe so you don't miss next month's checklist. And drop a comment if there's a specific benefit or bill you'd like this channel to cover in more depth. I'll see you in the next one.